Okay, not much happened. The stock market was flat today. The Dow was down 34 points, down 0.80%, maybe 0.08%. The S&P 500 was down just over half a point, just underneath the 6450 area at 6449, and again, down 0.01. NASDAQ 100 and the S&P stalled at resistance last week. Still possible they reach it again. Again, remember that's rising resistance in the weekly time frame, but so far they're stalling there. NASDAQ flat, up 0.03%. The Russell is up 0.35%. The VIX was down 0.66%. Yeah, we have Jackson Hole this week. Friday, we have Powell speaking. I believe that Powell is going to officially cancel the September rate cut. We got the jobs report at the beginning of the month. The market rallied. Oh, the jobs, they're weakening. We get the CPI. Let's ignore the core inflation's rising. Headline number, it came in better than expected. It's holding steady at 2.7, and again, just shrugging off the core inflation completely. Then we get the price index wholesale inflation. We see it rise to the highest level, the largest, not highest level, but the largest surge in 3 years. Now explain to me, why is Powell and the Fed, why are they going to cut when inflation's ticking back up? You get these people that are so addicted to stimulus that they get out of touch with reality. And again, there's no reason for the Fed to cut with inflation ticking back up. Powell is scared to death of Trump's tariffs. The inflation that I predicted that was going to begin to rise a few months back, seen it with the CPI, now we're seeing it with the PPI. Now, with Jackson Hole this week, we've got a bunch of Fed speakers. Powell on Friday. We're going to get the FOMC minutes from the last meeting on Wednesday during the market session. Then this coming Friday, we'll have Fed Chair Powell speaking during the market session. They're speaking from Jackson Hole. At the bottom in April that we at a bottom when everyone was saying we're going to crash because we're hitting major support. We're hitting this rising trend line from 2020. This is our linear scaling. And I called the day of the bottom based on this. And I told you before we had Trump's tariff liberation day, I told you we were going to be bottoming with the tariffs. Just as I'm telling you, the August 1st tariffs are going to be associated. We're overdue for Trump to rattle markets with his tariffs. Likely going to see that happen this week or next week. Powell's going to cancel the September rate cut, pullback. But just as I told you, we are bouncing up these levels of support, the trend line, horizontal support here. I told you again, we're slamming into these trend lines of resistance. Now we've got this little divergence going on with the RSI that's likely going to give us a pullback. Again, we still may flirt with this trend line again. You got a good shot. We're going to be turning down off of it, even if we do. I think you got a really good shot that Powell's going to disappoint markets this week, and Trump will eventually rattle markets with his tariffs this week or next week. Our linear scaling, the trend line. This is from the 2023 bottom. Here you can see the trend line from the 2023 bottom with our linear scaling in the daily time frame. 2023 bottom. This trend line touched right here, and then we came up, we broke it. Sell off from the February high. We've come back and we're back testing. It's likely we're going to get rejection here, but eventually I think we'll get above this trend line and head towards the trend lines in the weekly time frame that are just above it. Hit it right here with our July 31st peak, and we're slamming into it again here last week. So again, you got a pretty good shot. We're going to get rejection off this level. If we do go higher, again, you could just go slam right into the trend line, go slightly higher, but you got a problem. You're still at resistance. And this trend line will likely give us a sell-off either with last week's high. We try to tag it again. But like I said, my signals are still bullish. They have to turn back to bearish. Last week's high is going to hold. Not only do we have that trend line, this is the same trend line I just showed you in the daily time frame. Not only do we have the 2023 trend line with our linear scaling, but with our log scaling. Now, again, eventually I think we go up to this upper channel. I've just drawn a parallel boundary from our 2022 peak there on the S&P. And again, this is where I think we're headed. I think we're headed towards probably 66 or 6,700, more likely 6,700, maybe a little higher than that, maybe a little bit lower, but that's where I think we're headed. Same thing here with our log scaling. We have a different trend line from our peaks over here, late 2021 early 2022, the January peak, and again connect that with our December peak, and it's pointing right up to where our January 31st high came in, and then our high from last week, forming this divergence. It's likely we're going to see some kind of sell-off and then eventually, again, go up towards the upper channel line. This is our channel from the 2022 low with the log scaling, and again, near that 6,700 area. This is where I think we're eventually headed. I think we'll eventually clear these trend lines, but I think we get a pullback first. Quickly, I want to show you the NAAIM exposure index. This is what active money managers are doing, and that you've up here at an extreme, getting a divergence. Here's our log scaling. You're slamming into that trend line. This divergence is probably going to give us a pullback, as all of these other extremes or divergences at extremes have done so, whether small pullbacks or larger pullback or major reversal back over here in 2022, or these bottoms. Again, the divergences at extremes tend to give you a sell-off. Something worth paying attention to. Active money managers all in. This is one of the reasons why I told you when I called a bottom in April, believed it was a bottom because we're at extremes down here. So just another thing that is suggesting we're going to see a pullback. NASDAQ still at the trend line of resistance. Again, if we go trying to go higher, you're going to slam right into it again. Right now, we're just under it. Our log scaling in the weekly time frame. Our linear scaling with the NASDAQ, we're slamming up into the trend line, slightly overthrowing it. I think you're going to pull back and do the same thing Nvidia is doing. I think NASDAQ has a broadening formation that's developing here. I think we'll pull back, and then I think we'll finish it likely in the next couple of months, probably by October or November. Maybe it drags on into December, but this is what I think is happening. Same thing I think is happening for Nvidia. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel today. Follow the link below to take you to a secured site, and you could donate any amount you want. I just ask that you do that rather than having sponsors and selling you something. I don't want to sell you anything. I'm no salesman. But I do need to hear from you in order to make it work. Just put it all out there and ask that you just partner with me. If you could take a moment to do that, I would greatly appreciate it. I thank you for your consideration for that. The VIX down today, staying at our 10-period moving average. S&P is above it. VIX is below the 10-period. Again, you've had these divergences form. If we see the MACD turn back up, go in positive territory, that will likely mark a top for the S&P, with the VIX getting back above the 50-day moving average right there. Then we need to see the RSI turn back above 50. The S&P getting a bearish cross on the stochastic in the daily time frame today. We got the bullish cross here with our stochastic on the VIX. Moving slightly lower. Are we now getting another divergence point here with these signals? 100 was also flat today. It was up 1 point while the S&P was down about half a point here. Up about 1.5 points or so. But we get a red bar. I told you to be watching for that on the awesome oscillator. The S&P did not get one. We'll see if the S&P joins the NASDAQ. Remember, the NASDAQ peaked Wednesday, got a black candlestick. So far, that high is holding. Diverged with the S&P that made a new high on Friday. Oftentimes, divergences can mark turning points. They're both slamming into resistance. We'll be watching to see what happens with this red bar. Do we get red bars and now begin to get a reversal of conditions? The last few reversal of conditions only gave us pullbacks. We had one July 31st, and again, saw things turn right back to bullish. I told you if that were to happen, then we would get a divergence on the RSI, which we now have. Is it now done from last week's high? We get another reference point of a divergence. We had a divergence here with our July 31st peak right there, and then we turned down, we went higher, but then you're making another lower high. Slamming right into that trend line from these previous highs back over here, forming this divergence, meaning that price is moving higher, the indicator is making a lower high. That's what a divergence means. NASDAQ daily chart. We'll see if the S&P will join the NASDAQ tomorrow or at some point later this week. We'll be watching to see if we get a red bar, and then we'll be watching, do our highs hold? Now remember, we're turning off of rising resistance trend line of resistance in the weekly time frame. Got a couple of them we're turning off of, but you still may try to go back up and hit it. We got to get a reversal of conditions if we're going to turn here. Got to drop back below the 10 and 20 period moving average. The spread between them has narrowed, 10 being the red line, the 20 being the blue line, but you got to drop below them and then drop below the lower boundary of the cloud, get a red awesome oscillator bar to get a reversal of conditions. Get another reference point of a divergence here. Again, we had one over here, and again, now we're getting another lower high and setting up yet another reference point. And how we had a multiple point divergence where this divergence back over here, it only gave us this corrective moves, really sideways move right here. Then another reference point with our divergence with lower highs right here, and again, sideways correction. This was a pullback. We've gotten these smaller corrective moves. This one will likely be bigger towards the 50 or the 200 or maybe somewhere in between. But then I think we go on and make new highs. The S&P slightly down by just over half a point. The NASDAQ up. NASDAQ 100 up just over a point. Market flat today. So I think you'll see red bars in the next couple of days here. Maybe by tomorrow. Will Powell or Trump be the catalyst? I talked about Trump being overdue to rattle the markets with tariffs, and talked about that last week, and on Thursday went into great detail about it. Friday morning, Trump comes out, rattles the market with talking about semiconductor tariffs, more steel tariffs, talking about pharma tariffs. I want to be watching what's going on with these negotiations with ending the war in Ukraine, because again, if Putin doesn't come to the negotiating table in good faith and make a deal, then Trump's going to slap sanctions on him. That's going to collapse the Russian economy. And then Trump's going to slap stiff penalty tariffs on any country that buys Russian oil. And he's already done that with India. See really aggressive penalty tariffs for any country that will buy Russian oil. Again, the idea being hitting Russia in the pocketbook so they can't fund the war. Russian oil is funding the war. Again, if, and I have no idea what's going to happen, but I'm just telling you, if Putin doesn't agree to make a deal in good faith and wants to play games, then Trump's going to slap him with sanctions. We're not there yet. We had the meeting over the weekend and there was some progress made. Now, these things can take a little bit of time, but they're going to try to get another meeting and eventually hammer this out. Zelensky's meeting with Trump today. You have NATO members meeting with the U.S. Again, if they can pull this off, then great. Just warning you that if they don't, Trump might implement massive penalty tariffs for anybody doing business with Russia. We're already starting to see a little bit of that, so something worth paying attention to. But I'll be watching. Did we get red this week? And again, does Trump rattle the market this week with the tariffs or semiconductor tariffs, steel tariffs, pharma tariffs? Is that next week? We know it's coming. And again, people thought it was already announced on August 6th. Again, Trump was just making suggestions about where the semiconductor tariffs on semiconductor imports might be. It wasn't an official announcement, as I talked about over the weekend. So that's coming. And again, is that coming this week, next week? We'll see. By Friday, I think you're going to have Powell dashing any hopes of a September rate cut. And you've got the people out there, oh, here it comes, here it comes. And again, there's no reason for the Fed to cut in September. With inflation ticking back up, with the producer price index soaring, core CPI continuing to rise, there's no reason for them to cut. Now, right now, an 83.2% chance of a rate cut in September. Again, the CPI had gone up to 98%. Oh, yeah, the CPI, no reason now. The Fed's going to have to cut. Yet they totally ignore, because the headline number came in better than expected. 0.1% better than expected, from 2.8 down to 2.7, and it stayed the same year-over-year basis. Yet we saw the core jump up 2.9 up to 3.1%. Nothing to see here. People are so out of touch with reality on Wall Street. They're addicted to stimulus cuts and QE. But then we get 2 days later, we get the PPI wholesale inflation, and it soars at the largest amount, by the largest amount in 3 years. Jumped up a full percentage point on the headline number and over a percentage point on the core. And so we've seen the percentage of a rate cut in September start to come down with that. People on Wall Street are totally out of touch with reality. There is absolutely no reason for the Fed to cut right now. They should be cutting because a recession's coming. They should be slashing rates. That's a good reason. But the Fed believes their own nonsense that we're going to have a soft landing. So if you're Jerome Powell, there's no reason to cut. We're going to have a recession because we're going to have this, fake soft landing that we always say that we're going to have that we never get. It's a fairy tale. But Powell is still scared to death of Trump's tariffs, which he's going to be announcing more tariff news here this week or next week, or maybe both. Got semiconductor tariffs coming, the announcement. You've got pharma, you've got steel, possibly penalty tariffs for anybody buying Russian oil. Depending on if they can go forward with negotiations or not, then that may be paused for a little while. If they may be able to hammer out a deal, let's all hope they can. So 83.2% chance. Now, again, if we don't get that, there's a 49% chance that we get the quarter cut in October. It's less than 50%. And then one more cut into December. So this was at 3. Now it's at 2. Maybe because we're below 50% here. Like I said, we're going to get the cuts, and maybe it takes a little bit longer going into the new year. Once we see the market go make a new high and then begin to crash, the Fed has a hard time of figuring these things out sometimes because they're Keynesian, so they're blind to what's going on. If you believe Keynesian economics like Powell, you're going to be blind to what's going on. You're going to say things like there is no housing bubble. You're going to say back in 2006 and 7, you're going to say things like when inflation is rising and soaring and going towards 9%, you're going to say things like inflation is transitory. When inflation drops to a 4-year low, like it is right now, you're going to be scared to death of inflation. In the Fed's world, up is down and down is up. And it's because they believe this nonsense. Nevertheless, I digress. We're down to 83.2%. Still hope of a cut. All the Fed, and I've saw on social media, especially in the crypto community, oh yeah, we're going to get the cuts, and then we're really going to go at 2026 is going to be this great year. And again, we're going to get cuts, and it's going to be for the wrong reasons because recession is coming. We may not figure that out until December or January. If we go up as I think we are and going to see the market peak later this year and then begin to tank, by the time the market tanks, they'll panic and they'll figure out that their soft landing fairy tale isn't going to happen. The Fed makes the same mistake at every single market top, every single top. Doing the same thing now they did back in 2007 and 8, doing the same thing now they did back in 2000 and 2001. If the Fed were a stock, I would be a trillionaire. Those hoping for a cut are going to get their hopes dashed, and then maybe Trump gives us even more volatility with his tariffs this week or next week. I expect Trump and Powell are going to tank the market and give us the pullback. Now, we saw the peak over here with the CPI rally taking us above the July 31st high. We went slightly above it, and then we began to pull back, slammed up into resistance here, and then here again. On Friday, we went slightly higher. The NASDAQ did not do that. It made a lower high. We had a gap and trap, and we gapped higher, and then we turned down. You see it here in the 5-minute time frame, dropping below the 50 and the 200. 50 and the 200 got a bearish cross. Today we were pretty much flat. A little bit of a sell-off, rebound back up, and then a sell-off. Ended up closing down half a point, stalling at our 200 period here in the 5-minute time frame. So if we resume the decline, we got to get rejection around here or overthrow this area and get rejection. If we're going to resume the decline and keep the 50 below the 200 and mark the Friday high as a peak. If we go back and test it, we can slam into the resistance from the weekly time frame yet again before turning down. I'll show you that in just a moment. Push higher on the intraday high there for Friday gave us these divergences. Remember I talked about how we had the peak over here and that we were, getting the CPI rally, and then we continued here in the 15-minute time frame, pulled back. but then we went slightly higher to form a divergence. Now we've broken the trend line. We've rallied back up to the 200 on the 5-minute chart, the 50 period here on the 15. If that holds and the cloud of resistance, then we can come back down and start taking out today's low, and then maybe this holds as a peak. But we have broken the channel. Did form these divergences on intraday charts last week, and you can see it down here on the MACD. If we go back up above these resistance levels, then again, you have your resistance in the weekly time frame. Same thing here on the 30-minute chart. Broke below the 50, rallying back up to the 50 and stalling there with the divergence. So we'll see what happens. Momentum and signals are still bullish. They would have to flip, momentum has to flip to bearish, and we have to drop below the 10-period moving average in the daily time frame if we're going to see a sell-off with this divergence playing out. We have a divergence also on the 60-minute time frame, but we're at the 50. We're just above the 50. We're just above the 10-period in the daily. If we try to turn back up, you still might get a larger one here. Go slam right back into the weekly resistance and then turn. That would create a short squeeze for the shorts, all the herd into a false sense of security, and then turn down. But regardless, again, however it plays out, I do think you're going to get this pullback. I think the August seasonality sell-off is going to play out. I just think it's been delayed. We do already have a divergence right here. So we'll be watching. Do we get another reference point of it, or do we have it done? Does the MACD go negative, or does it firm back up? So we'll be watching this closely. Again, we have this divergence. The question now is, on the RSI, is it done? I talked about the breakdown of the rising wedge and the back test with the RSI reaching extremes, but I told you that if we went back up and tried to challenge that high, it would end up forming a divergence on the RSI. There was no divergence down here at the bottom with the RSI. We just reached an extreme. I told you with this extreme, we were hitting resistance. I told you that if I was wrong about that being a peak, that we would form a divergence. It may not be done yet. Again, we still may slam into the weekly resistance before all is said and done. If we are done, we need to see evidence of that by dropping back down below the 10-period moving average to 20-period here, the momentum line. But now we have stochastic rolling over here. So again, can we see momentum flip immediately, or do we see it happen later in the week, leading up to Powell or with Powell in his speech from Jackson Hole? I think Powell is going to end up dashing all hopes of a rate cut for September. Now, we may get a divergence in the most recent price action here on the RSI. We have this larger one already. If we do try to push higher, you might get it. If we turn down, that could be all she wrote. Now, signals are still bullish. You got to see a sell-off, a start of a sell-off, in order to flip momentum back to bearish. We did see the S&P drop back below the upper Bollinger Band. And again, turned off it over here with the July 31st peak to form this divergence. Again, close below the upper band might mark a peak, but there's still the possibility of tagging that upper band, which would slam right into resistance again. So again, right now, signals are still bullish. Great Scott, did you hear what I said? Signals are still bullish. Got to turn bearish if we're going to mark a peak from last week. Otherwise, the risk is we still try to push higher and then turn. And again, divergence, the question now, is it done, or do we get one here in the most recent price action? Market was flat today. We hit resistance last time, and we got a bearish bell-hole candlestick, turned down, confirmation, but no follow-through. We went back up, went slightly above this peak right here, 0.64% higher. On an intraday basis, 0.85% higher, a little bit higher. Slammed up into resistance again and stalled there. So do we hit it again this week? Again, that resistance in the weekly time frame is a trend line that's rising, or is that it? And the divergence is now done on the RSI. If it is, we got to take out the 10-period moving average here. This is a daily chart up close. That's the 10-period. And then we got to be able to start heading back towards our 50-period down here and the 200-period moving average if we're going to get the sell-off right here and now. Talked to you about the 9 count forming, and we had to be able to close above this bar right here from 4 bars ago. Let's take a look at that on the S&P. Before I show you the 9 count on the S&P, I just want to show you NASDAQ real fast. Again, we're above that 10-period moving average. The NASDAQ was a point higher. The S&P was half a point lower. Black candlestick from last Wednesday. The S&P made a new high on Friday. They did diverge. Sometimes divergences mark peaks. We slammed into major resistance for both last week. If we're going to sell off, we've got to take out these 10-period moving averages. Do we rally back up, slam into resistance again, or do we get another divergence out of them, or do we start taking out these 10-period moving averages? Again, my signals are still bullish. We got the red bar on the awesome oscillator today for the NASDAQ, but my signals are still bullish. We've stalled at resistance last week in the weekly time frame. Black candlesticks sometimes mark turning points. We'll be watching to see what becomes of this one. I don't know if it means anything, but we completed a 9-count sell signal on the S&P 500 today. Again, sometimes the counts, you get them, and the 8 or 9 bar marks the high of the count, and that's it. That's all she wrote. Completing our diversions on the RSI. Other times you throw a little bit higher, like we did over here. We got the 9 count, went a little bit higher, and then you get some kind of a sell-off reversal. So far, the counts have just given us pullbacks or sideways move. The 13.9 here went a little bit higher, got a little bit of a pullback. Back there in June, got the July 3rd high and got the 13.9. We went sideways for a couple of weeks. We got a breakout and back test, and then we had that final push higher to get another 9 count as we slammed into the weekly resistance trend line. 2 different ones I've been talking about in the weekly time frame. Sold off after inching a little higher there on July 31st, but only for a day. Sharp decline. We've rallied back up. Now we get another one. Just because you get a 9 count doesn't mean, oh, that's it. It's telling you that you can get a pullback or a reversal. That's what it is telling you. Sometimes the 9 counts mark the peaks. Other times you go a little bit higher, as in the case over here and over here. So which is this? And this is telling us we could either get a pullback or reversal. When I say reversal, I mean a bigger pullback than what we've seen, because I don't think that if we do start to sell off and this peak is it, I don't think that's the top. 9 count completing on the S&P today, just there at resistance from last week. Had a 9 count in play on NASDAQ. It got canceled out because we closed below the bar from 4 bars ago. Again, NASDAQ up just 1.5 points today. P closed above the bar from 4 bars ago. NASDAQ did not. So again, we'll be watching to see what happens with our divergences on the RSI, but the 9 count got canceled out. They don't always play out. Doesn't mean we're not going to get a sell-off. So far, last Wednesday's high is holding. Still have a 13 count in play on the Dow. We're up to bar 11, but the Dow, again, down a little bit as the market was flat today. Same for the Russell. We have an 11 of a 13 count in play, 5 of a 9 here. So again, I'll be watching the Russell. I'll be watching the Dow. Do they complete 13 counts, or do we see that happen at a later date? Does a count end up getting canceled out? And Nvidia has stalled just under key resistance in the weekly time frame. I've talked about that. It's got a negative divergence, but you still have a possible 13 count in play on Nvidia. Maybe it gets canceled out, or we see it form at a later date here. But right now you've got a bar 12 of 13, and we're going sideways here. Nvidia stalling just under the trend line with our channel, our long-term channel, with all the data that we have on Nvidia. Again, we hit it June of 2024. Fell just shy of it after that with the peaks, and now we're just under it. Again, this is where I think the Nvidia top is going to be, although I think we're going to pull back and then go up and hit this trend line again. And I think we're going to top in a couple of months from now. If you look at the weekly chart, we hit it back in June and then fell shy of it a couple of times here, late 2024, early 2025. Again, sold off. It was Nvidia that helped me call the bottom in the market. It got a 9 count in the daily time frame. We had a rally, and I told you it was either going to set up a head and shoulders top or a broadening formation and go back up and slam into this trend line again. Talked about a trend extension above this level. Just over a month ago, I told you why I think that is much less likely. I think we get a pullback and then we go up and hit the trend line again, and I think it's over. Nvidia sells off. So will the market, but I think it will just be a pullback in a larger topping process. It's Nvidia weekly chart right here. I told you I'm watching this trend line from these lows over here, excluding the shadow, and this low right here, and this low right here. We broke it, and are we back testing that now and we're going to sell off, or do we slight adjustment in the trend line, excluding this level, and we take it from over here? Are we going to bounce? I say that because we're going sideways. There's not a decisive break to the downside with the break of this trend line. Trend lines can sometimes change. So here it is. Again, I'm removing this low right here and this low right here and just taking it and connecting it to this low right here. Are we seeing a slight breach of this level, and then are we going to just bounce one more time and slam into that weekly trend line I showed you? Or is that it? And our doji from last week holds as a peak right here, and that's all she wrote. And we begin to get a decisive break here. Watch this trend line, though. It's broken and back tested, or not yet broken. If we do go higher, we could do a redraw on it. But if we've broken it here, and I'll put it back the way it was, then maybe you have a back test. We need to see evidence of that with the divergences playing out with Nvidia in the daily time frame on the RSI. We got the divergence on the RSI, just like on the S&P, just like on the NASDAQ here. We've got a triple negative divergence, but so far we're going sideways. This is to play out. We need to drop below the 10-period moving average. The 20-period moving average will begin to sell off. I think we're going to sell off, get a wave 4, go up and get a wave 5, slam into the trend line that I showed you in the weekly time frame. I think that's going to happen in the next few months. I don't think it's going to be by September. I think it's going to be more like October, November. Maybe it goes on into December because we're going sideways here in August. Still think we got to have time for that sell-off that's likely going to spill over into September. Just a little bit. Video was up 0.86% today. The NASDAQ has peaked again. If it's done, then we've finished primary wave 3. We're getting primary wave 4 and then eventually get primary wave 5. You can see the divergence here. The question now, is it done or do we go up a little bit higher? Climb into the weekly resistance yet again.